At 1:47 a.m., an analyst's phone lights up. He doesn't groan. He doesn't check who it's from. He just picks it up, because in investment banking, there's a rule nobody writes in the offer letter, nobody says in the interview, and nobody explains during orientation. The rule is this: you are not being paid for your work. You are being paid for your availability. And once you understand that, everything about this industry, the hours, the culture, the money, starts to make a different kind of sense. Every bank sells the same story. Prestige, fast-track careers, 7 figures by 30, and it's not a lie. The money is real. The exit opportunities are real. But underneath the recruiting deck is a second contract, one nobody signs but everyone agrees to. It's not written down because it doesn't need to be. It gets passed down instead, analyst to analyst, in 100 small moments that teach you the actual rule of the business. Here's the thing people misunderstand about banking. They think the product is financial advice, or deal execution, or spreadsheets. It isn't, not really. The product a bank sells to a client is certainty. The certainty that when a deal needs a document turned around at 3 a.m. before a board meeting, it will be there, perfect, on time, no excuses. And the only way to sell that certainty is to have a team of people whose personal time doesn't exist as a boundary. That's not a side effect of the culture. That is the culture. Junior bankers aren't selling 80-hour weeks. They're selling the guarantee that the 81st hour is available too if needed. Nobody sits new analysts down and says, your evenings belong to the deal now. Instead, it's taught through small, deniable moments. A request phrased as a question that isn't really a question. A senior banker who leaves at 6 but expects the model updated by 7 the next morning. No one asked you to stay till 2 a.m. to do it, and yet somehow that's exactly what happened. This is the unspoken rule doing its work. It never has to be stated, because the incentive structure says it for you. Miss a deadline because you had plans, and it's remembered. Cancel the plans instead, and nothing is ever said, which is exactly the point. You might ask, why would anyone accept this? The answer is that the industry has built an incredibly effective trade. Give us 2 brutal years of total availability, and we will hand you a resume line that opens almost any door in finance. Private equity, hedge funds, corporate strategy at a Fortune 500. The analyst isn't really selling 2 years of his life to the bank. He's buying an exit option, and the price of that option is priced in hours, not dollars. This is why the unspoken rule survives generation after generation. It's not enforced by fear. It's enforced by a bet everyone in the room has agreed is worth making. Here's what the recruiting deck never shows. The rule doesn't just cost hours. It costs the ability to be fully present anywhere else. Relationships get scheduled around deal timelines. Birthdays get missed, then apologized for, then eventually just expected to be missed. The body adapts to 5 hours of sleep the way it adapts to anything, not because it's healthy, but because it has no other option. This isn't a warning to scare you off. It's just the other half of the trade that almost never gets said out loud. Not everyone plays by the unspoken rule the same way. Watch long enough, and you'll notice something. The bankers who last more than a few years usually aren't the ones who were available every second. They're the ones who learned exactly which moments actually mattered to the deal, and protected everything else quietly, without announcing it. They didn't break the rule outright. They just learned its real shape, which is narrower than it first appears. The rule isn't always available. The rule is never be the reason it fails. Those two things sound the same at 22. By 30, the people still standing know they aren't. And this is the part worth sitting with. This isn't unique to banking. Surgery, corporate law, venture-backed startups, every high-stakes, high-reward field runs on some version of the same unspoken rule. The reward is never really for the skill alone. It's for the skill plus the willingness to be interrupted by it, at any hour without complaint. Once you can see that rule, you can see it everywhere, and you can start deciding, consciously, instead of by accident, how much of it you're actually willing to accept. So back to that phone lighting up at 1:47 a.m. The analyst who picks it up isn't weak, and he isn't foolish. He's playing a trade he understands. For a payout he's decided is worth it, for now. The unspoken rule of investment banking was never really a secret. It was just never going to be said out loud, because saying it plainly, we're buying your availability, not your time, would make people think twice before signing up. Now you know it. What you do with that is up to you.